And so we're here. We're live with Alan Tsen, aka granddaddy of everything fintech in Australia at the moment, aka the sender of a very awesome newsletter, Fintech Radar.
Yeah, that's it. That's the one, Simon.
How long has that been going?
Well, I mean, it's sort of a return. So I used to write a newsletter probably about 2 years ago now. It was focused on broadly fintech, but probably centered more around sort of blockchain-y digital currency stuff. So sort of a return. I did about 200 sort of issues on that one, and then this one's about 3 months old now, sort of 12-ish issues. Yeah.
Nice, beautiful. And for the heathens watching this who don't know you, don't know your background,
Sure.
just a really quick 1 minute overview.
Yeah, so as you sort of noted, been in the fintech space, alluded to. I've been in the fintech space for quite a while now. Been working on a range of stuff. Probably the stuff that I'm known for is my work at Fintech Australia, where I'm the chair. I've been on the board for a while and sort of been active in that organisation for about now 4 years. And then also used to head up a fintech innovation hub here in Victoria called Stone and Chalk, which I did for about 2.5 years. Left late last year to start a fintech focused seed stage fund. So that's in the early stages of getting off the ground. So that's what I'm up to at the moment.
Beautiful, fantastic. So we'll jump straight into it then.
Yeah.
Neobanks. We've seen the rise of interest in neobanks over the last few years in the UK and here as well. Obviously, the team at Up are doing some interesting things. What sort of percentage share of wallet do you think neobanks have against traditional banking at the moment?
It's tiny. Like, I think if we think about how big the Australian financial services market is, it's sort of it can be. It's easy to underrate how big the financial services market here is in Australia as compared to other markets. I sort of joke sometimes it's sort of the Galapagos Islands of financial services, right? There's so much happening in Australia, and neobanks are just sort of at the start of the race, right? So most of them aren't probably more than 3 years old, and at the moment, very small percentage of the market. I don't know the numbers off the top of my head, but they're relatively small still.
Yeah, and in terms of the local neos and the startups, how are they comparing in terms of maybe maturity of offering and the way that they're working with customers compared to perhaps some of the more established neos in Europe?
Yeah, so it's probably worth taking a big step back and thinking about why neobanks have become a thing, right? And really what, in my opinion, it's been driven by is the fact that, one, the underlying technology, and this is something that's under-discussed, the underlying technology which allows you to actually become a bank has become a lot easier. And then the other fact that's probably under-discussed, but is well known in the industry, is that there's been regulatory change that has allowed this to happen. So if you look at the UK, really it's from the ashes of the last GFC that we saw neobanks rise. And that has influenced, those two things have influenced the types of offerings that have been available and sort of where most of them have started. So in terms of what we've seen in other markets is that they've tended to be a reaction to those two main things, right? One is what are the technologies that are available which allow you to actually start? And then also what is the regulatory framework and what were the sort of broader market pieces that allowed this to happen? And so if you think about Australia, generally speaking, on the technology side, there have been offerings that have obviously come to market which allow this to happen a little bit more easily, and different partnership models. So you think about Up, they've partnered with Bendigo Bank. That's a pretty unique model on a global scale. I mean, we saw that with Simple Bank in the US, and that was probably one of the first real neo banks that piggybacked off another bank. But most of the stuff that we've seen happen here has been a reaction to a third piece, which is what I'll sort of call the slowness of incumbents in terms of adopting technology to sort of bring a better experience to customers. So in that regard, it's still relatively early in Australia, and if we compare them to other markets, it's sometimes can be a little bit deceiving, because I think those starting points that the T equals 0 it sort of matters, right? And in Australia, we've sort of seen that more around reaction to the major 4 banks not really innovating as hard as they can. So it's sort of the pace is a little different, and sort of why they've become popular is a little different.
Yeah, I think there's a lot of, and I totally agree. I think there's a lot of interest in Neos, particularly from new users, because the onboarding experience there,
Correct.
the CX around new account creation is a lot more in line with tech. It's very personalized, very cool. Easier to do that at a small scale, harder when you're onboarding hundreds of thousands potentially of customers. So I think there's probably some teething stuff that some of those businesses will go through if they get to that sort of scale. How do you think Australia's fintech scene is regarded globally?
I think incredibly well, right? Like, I think much like, you know, and New Zealand's another one that gets sort of lost in the mix sometimes when we talk about fintech globally. I think we bat well above our weight, right? I think we're an ecosystem that's doing a lot of interesting things. But again, sort of in the broader context, we sort of get lost in the mix, right? So if you look at the UK is probably most known for the innovations around neobanking, and sort of the big brands in neobanking are UK-based ones. Australia, you know, probably doesn't have that. I think the closest thing we have to that is probably buy now, pay later, where we've been sort of as a ecosystem pretty far ahead of the market. You know, it's easy to, again, I think, categorize a lot of markets and a lot of players based on the propositions that they're bringing to market. But I think some of the underlying business models are the ones that are really the most interesting. So buy now, pay later is not really a new business model. It's just been innovated in a very digitally native fashion. And some of the interesting stuff, again, is sort of behind the scenes, right? It's like, how do you think about the risk profile? How do you actually think about bringing customers onto the platform in a way that's a little more streamlined than you know, normal credit card systems would sort of provide for, right? So I think the ecosystem in Australia is pretty rich. It sort of just depends where you look, right? And sort of what stage of development. We talked a little bit about neobanks, but you know, it sort of depends on the pockets we look at in terms of how, on a global basis, whether we're sort of leading or following.
Yeah, I agree, and you're right. It's funny, isn't it? You know, the BNPL space and borderless transactions, they're not new concepts. They're just being done differently. And air wallets and Afterpay, and obviously local businesses getting a lot of noise in the market. Can you confirm? Is there any truth to the rumor that to become a super successful fintech business in Australia, your name has to start with A?
I think it's much like there are in other sectors, you know, Zoom, right? Like the sort of the word Zoom, depending on how you spell it, seems to be a really popular word. But yeah, like A seems to be a pretty popular letter if you think about the Australian ecosystem in terms of people that have been successful. Also, I should say companies have been successful.
Atlassian.
Right. Yeah. Afterpay, Assembly Pay, like there's a whole bunch of them. Air wallets, right? Yeah. But I think, you know, just coming back to the point around buy now, pay later, over discussed is, I think, technology in the fintech space. Under discussed is business model innovation, right? Yeah. You know, controversial view is that I think technology, unlike in other sectors, hasn't been the main driving factor. It's been a factor, and that's more availability and just general cost reduction. But it's business model innovation that's been the core of what's happened in financial services, and tied with that, very tightly coupled, is sort of the regulatory innovation that's happened in a lot of markets. You know, the fintech sandbox that sort of, you know, we now have an enhanced version here in Australia, you know, started in the UK, seen it across a number of jurisdictions, but those tend to be the big wins of change that have allowed a lot of this stuff to happen, right? You know, UK under discussed, I think probably the major factor that's driven the UK to being a centre for fintech innovation has been the FCA having a mandate to push competition in financial services market, and that really started to push a lot of the ideas forward in terms of how you crystallize that, how you make that happen in markets. Fintech is not a story, I think, purely of technology. Unlike other markets, you can't imagine Uber coming to market without the invention of the iPhone, or, you know, GPS chips in phones being reduced to the small size and cost that they've come to. You can't imagine that world, right, without that supercomputing pocket. But financial services innovation has really been driven off different factors. Yeah,
and tying it back into the hiring, you know, the business processes, and the desire to let technology build out the business process that we want, that we think customers can really sort of get some traction with, it comes off hiring people who think in a certain way. I think it's probably easy to slam big four banks, but I think with some of these large scale organizations that think in a particular way, and this is how we've always done it, I think that's we open the door for some of these businesses who hire people that look at some of these problems slightly differently, and allow technology to roll out to enable what they're thinking.
Yeah, I mean, to work in fintech, you need a certain degree of naiveness, right? Like you need to be quite naive to think that you can change something in financial services, right? Because I think if you spend any time or spend any substantial time in financial services, you know how embedded a lot of these processes are and views are, right? And it does take someone to be relatively naive to come in, and I mean that in a good way, right? To come in and actually want to change a process, a system, or to bring a product to market. It does require that somewhat off-kilter view of the world, which is a real weapon in the space.
Yeah, and in sort of the more fintech, so from a consumer aspect, what are you seeing over the next couple of years are going to be the areas to keep an eye on? Insurance, that sort of thing.
Yeah, I've gone down the rabbit hole of insurtech more recently. I made an investment late last year in an infrastructure player. And sort of that sent me down the rabbit hole a little bit in terms of where insurance is at. I sometimes joke looking at an insurance company and their technology and the way they approach technology sort of makes banks look like they're the cutting edge of tech providers, right? Of tech companies. It's sort of like the Google versus someone doing a spreadsheet, right? That's sort of the comparison between banks and insurers. And so I think there's a whole bunch of really interesting opportunity there. Last week, also I should say, last week now, Lemonade filed their S1 to go public, and there's a whole bunch of really interesting data in that S1 around how they're going. Neobanks, we're only in the first innings. It's really early still. So I think the innovation we're going to see there is going to be really interesting. The types of products, I think we're still very, a lot of neobanks have been, or sort of the analysis around neobanks has been very much coupled to very traditional financial services products. But I think you'll tend to see a lot more going outside of the typical loans and, things that most people feel are the areas where they should be going. I think the ones that break out will be the ones that think slightly orthogonal to that. So they're the two main ones, I think, on the consumer side. And then there's, I tend to spend a lot of time in the infrastructure space. That's where I prefer to invest. And there's so much happening there. Incredible amounts of innovation happening on the back end, which is allowing a lot of this stuff to come to market more quickly, more cheaply.
Nice. And superannuation. I think we're going to start seeing superannuation funds acting in a more consumer-friendly way, right? I think with the changes over the last few years to my super and the super space in general, the regulation, I think we'll see, with it being so easy to roll in and out of funds now, funds are going to have to get more, I think you'll start seeing some more values and purpose-driven rather than just talking about returns. Talking about returns is one thing. They're all kind of within a gnat's chuff of each other, but values-led and purpose-led. I think the guys at Spaceship are doing a great job. I think there's also a fund, his name escapes me, that's only investing in green, making green.
Yeah, there's a few of those. Yeah,
but I think you might see some changes in that space.
Yeah, super's a difficult one, right? So everyone knows the challenge with super is that broadly people think about their finances in a very myopic way, right? And super's a very long-term, not a near and now problem for a lot of people in their daily financial lives, right? And so the challenge is how do you crystallize that into something that people will think about on a regular basis, right? And so some of the startups that have taken an approach where they mainly talk about your financial health and then sort of wrap into that, well, one of the most important elements of financial health is obviously your superannuation. This is the nest egg that will, provide for you when you can no longer work, right? And those conversations and that kind of positioning and go-to-market strategy hasn't worked as well, to be honest, as I expected. But it's sort of a challenging area. It really befuddles me, right? Like I don't understand at the moment. I haven't seen the proposition and how that proposition is actually going to play out, that it's going to work in market. I'm keeping an eye on a range of different players and sort of seeing a whole bunch of pitches around different approaches to it, but there's something missing, right? And I don't know what that is. I mean, there's a whole bunch of structural issues in the industry. I think one of the things that'll be important will be consumer data right applying to superannuation. So actually being able to pull a lot of that data and have that available, I think might be one of the keys to unlock superannuation for startups.
Yeah. I've always thought that if someone could figure out a product that sort of gave you the ability to look at your net position, and super playing a big part of that, then this sort of wealth management superannuation type space, and this product where you can look at what your net position is, and you've got a goal that you're aiming to get to by retirement, and you're plugging in your personal investments, property, super, all these sorts of things into this. I think that's the conversation. How do you get people on board early with that? I don't know if people in their 20s think that way. I don't know if there's any 20-year-olds that watch this. Maybe they can let us know. But I think you're certainly probably late 30s and above is probably where people start mentally having that sort of that conversation. And that's the thing for super funds, right? Is to try and capture people early and become part of their day-to-day.
100%. Like if you speak to anyone in superannuation who's sort of working in the innovation parts of those businesses, the 6 people in Australia that are working in that space, most of them talk to you about engagement, right? And how do we engage our members and sort of what are the ways we can better speak to them? And again, superannuation, the infrastructure in superannuation is a pirate, right? It's one of the, I joke, right? It's one of the industries that's full stack in financial services, just broken. And there's so many entry points, right? Like everything from infrastructure to be sold to superannuation funds through to actually disrupting them at the consumer facing side. Like there's so much area there, surface area to attack. It's interesting, but the challenge is the surface area is there. It's just, how do you penetrate? How do you actually get through is really hard. I mean, most of the superannuation, direct-to-consumer superannuation propositions are still relatively, in terms of assets under management, still relatively small. And if funds under management is small as well, right? Obviously tied with that. But it's a challenging one, but it's such a big opportunity.
Yeah. The situation we've been through for the last few months, obviously a big global impact. What sort of long-term impact do you see, if any, on the fintech space? Will we rebound? Will the fintech space just keep ploughing on and trying to make stuff happen regardless of what's gone on globally?
Yeah. So I think it's sort of two speed, right? Like there's a bunch of startups in the fintech space that have done really well in this time, and that's mainly through obviously providing utility in a time where for example, cashless payments are obviously something that just is the daily use case for how we pay. And then there are others who are probably struggling a little bit more, right? So like the lenders, SME lenders are probably finding it a little bit more challenging at the moment. And so it's a bit two-speed, right? Again, I've tended to sort of look at, or I do tend to look at infrastructure plays, and a lot of those are running hot at the moment, right? Everyone from incumbents through to startups are thinking about how they can quickly get to market or improve the proposition on the incumbent side, and sort of what they need to get there is that infrastructure. Consumer side, it's sort of, again, like it's been a mixed bag, right? I think the ones that are very native to the internet, who are providing services online, so payments is the most obvious one, have done relatively well. This sort of the two opposite impacts of broader consumer spending coming down a bit, but then also the amount of payments going online or being done online is rising. So net, I think most in that space have been doing pretty well.
Yeah. So I suppose the washout of this conversation is we've got a really well-regarded fintech scene globally, a whole bunch of opportunity. What are you sort of calling, anyone you're particularly calling out in the next financial year who's going to do big things that we should keep an eye on?
Who's really interesting at the moment? I have to talk to my portfolio of companies that I think are going to be doing really well this year. So one that I invested in late last year is a company called Frankie Financial, and they do KYC AML. So they're in that infrastructure space. KYC AML, CTF, all really hot topics in Australia and globally, to be honest. Obviously, we've seen certain banks really struggle with their processes around that. And then more broadly, it's I think in the fintech space, being seen on the consumer side, obviously, that's where it hits. The impact of not being able to onboard a customer because you can't get them through those stages of verification has become more of an acute issue that many are sort of thinking through. So obviously, I think what they're doing is really interesting. Another one that I invested in is Queensland-based startup called Cake, and they do cap table management. So very much for the founders who are listening to this, anyone that's ever tried to manage a cap table knows how hard it is to do without, messing up a formula in the Excel table. They do that all online, and they do some other interesting things as well tied with that in terms of your compliance. So, those are two that are, companies I'm really proud of in terms of being an investor on their cap tables. I think they're going to have both are going to have really interesting years this year.
Beautiful. Nice. I sort of said at the beginning we'd be sort of 10, 15 minutes. We've been 25 so far. That's the point of talking about something that you're into. I'm mindful of time, so I won't keep you. Quick shout out, where can people find you online?
So best place to find me is on Twitter. I'm Alan Tsen on Twitter. And then you can subscribe to my newsletter, Fintech Radar, on Substack. So that's fintechradar.substack.com. Write weekly about various things that are happening in the fintech space, but also do some deep dives into specific areas that are interesting. And last week, for example, did a deep dive into Lemonade's S1 and sort of tore down that and explained what the numbers are looking like and why, what I should say the strategy going forward looks like it's going to be.
Beautiful. And I'm guessing if anyone's watching this and got any questions around the whole sort of fintech startup space and need some introductions, then you're possibly the man to speak to.
Yeah, 100%. Reach out to me via Twitter. Just DM me. My DMs are open. And always happy to chat fintech.
Beautiful. Mate, thanks so much. Appreciate your time. Always a pleasure.
No worries.
Tequila on me next time I see you.
Yeah, no worries.
Beautiful.
Looking forward to it. See you later, mate.
See ya.